What is a pay period for calculating hourly wages? Imagine getting paid every 2 weeks or every week and wondering how your employer figures out your paycheck. That's where the idea of a pay period comes into play. It's a set stretch of time that your employer uses to track your work hours and calculate your wages. For hourly workers, this period is key because it determines how many hours you worked and how much you earn for that time. A pay period can be weekly, which means your hours are counted from Monday through Sunday, and you get paid at the end of that week. Some companies choose to pay every 2 weeks, called a biweekly pay period, where your hours from 14 days are totaled. Others might pay twice a month, called semi-monthly, which usually means the 15th and the last day of the month. Monthly pay periods are also common, where your hours are tracked for the entire month. To figure out your wages within a pay period, you start by noting the exact start and end dates. For example, if your pay period runs from January 1st to January 7th, you need to record all hours worked during those 7 days. You can do this with a time clock, a digital system, or even a paper timesheet. Once you have the total hours, multiply that number by your hourly wage rate. If you make $15 an hour and worked 40 hours, your gross pay for that week is $600. After calculating gross pay, you subtract any pre-tax contributions like health insurance or retirement savings. Then, taxes and other deductions are taken out. The amount left after all these deductions is your net pay, which is the money you actually receive. Knowing your pay period helps you plan your budget because it tells you when to expect your paycheck and how much it will be. If you are paid weekly, you get more regular income, making it easier to manage expenses. If you are paid bi-weekly or semi-monthly, you can plan larger payments or savings over a longer period. Employers must follow labor laws that often specify how frequently they must pay employees, especially those paid hourly. Using tools like payroll software or time-tracking apps makes it easier to record hours accurately and avoid mistakes. This way, you can be sure your paycheck reflects the hours you worked during each pay period. In short, a pay period is the specific time frame used to add up your hours and calculate your wages. Understanding it helps you stay on top of your income, budget wisely, and make the most of your earnings.